Well, the global crisis is hurting business, but not all companies are losing money. Let's take a look at some corporate winners here. Now, with more people working from home, demand for technology that enables online group meetings has been growing rapidly. Now, shares in video conferencing company Zoom have risen by 50% since February. Similarly, demand for TV shows and movies to watch at home has soared, so much so streaming services, Netflix and YouTube, are reducing the quality of their streaming in Europe to ease pressure on the internet. Well, supermarkets also say they're busier than ever. Now, sales at British retailer Sainsbury's are up by almost a quarter, and millions are turning to online fitness classes and home workouts. Shares in US home gym equipment supplier Peloton rose by 14% just last month. So which other businesses are benefiting from the pandemic? Let's speak to Craig Erlam. He's senior marketing analyst at trading platform OANDA, and he joins us now live from London. Craig, so among the dire economic forecasts we've been hearing, there has been some good news for some sectors. Is this likely to last?
In some cases, I think so. In the pharmaceutical sector, you're probably going to see some winners and some gainers, depending on who's first to market with drugs to try and deal with this dreadful situation. But in all of these terrible situations, there is opportunities, and this is just another example of that. You look at some of the trends which were materialising prior to this, which have really benefited from people staying at home. So you look at the working from home trend as an example. You look at the video conferencing companies. We look at even sales of monitors, of laptops, all of these things. If people are creating the infrastructure at home, then this could really accelerate that trend of flexible working. You look at online shopping. This is something that had already taken off, but it was still a smaller percentage of the market than physical shopping was. So all of a sudden, the companies like Ocado and and Amazon, all of a sudden you're seeing surges in demand. And I don't think this may taper off, but I don't think this is something that's going to fully reverse.
Well, then how can companies adapt to this? I mean, especially given this huge amount of uncertainty over just how long these lockdowns are going to last. What sort of changes should companies be looking at prioritising here?
I think companies are already adapting to this. Some of them are just fortunate they were in the right place at the right time. You take a company like Zoom that many people maybe a month ago hadn't even heard of, that all of a sudden everyone knows of. Most people have the app on their phone at this point for video conferencing. They were just in the right place at the right time. They were following the correct trend, but this has just given them an enormous surge. You look at restaurants, they're going to have to adapt very quickly. Retailers, they're going to have to adapt very quickly to these changing trends. The behavioural changes maybe for the next 12 months is probably going to weigh on a number of these as well. So it's about home deliveries. How can you get more into people's homes? Things like YouTubers, the fitness classes that you've just alluded to. There's plenty of areas for opportunity here, and old industries are going to have to adapt to a changing consumer behaviour.
Well, let me ask you about these opportunities then, because lots of investors have been watching the markets very, very anxiously. So is this then a good time to reconsider types of investments rather than pulling out of the markets entirely?
Well, I mean, I think when you're looking at the market, which is as down as it is, it's never is a case of just pulling everything out entirely and putting everything in entirely, selling at the top, buying at the bottom, these kind of old cliches. What you've got to look at is a market which is heavily discounted now, which I do think there is going to continue to be ongoing volatility in. So if you are looking to buy certain stocks now, you've probably missed that first wave in some of these companies, but I think there's plenty more opportunities that are still there. You've got to accept that there may be downside before you maybe see any return on that investment. So maybe think longer term because of the market volatility, which we're going to continue to see. But I think there's so many opportunities that are still out there. Yes, there are some stocks which are going to continue to struggle. The airlines, I think it's going to not be a difficult 6 months. I think it's going to be an extraordinarily difficult 3 or 4 years. But there are plenty of opportunities out there for companies that are well positioned, but also getting lucky and also, again, adapting their model very quickly.
Certainly winners and losers. Craig Erlam there from OANDA, a trading platform. Thanks for joining us on Al Jazeera, Craig.